cover the topics people see on the screen here. I'm just going to go to the first crazy looking slide here. That is a lot of colors. We're not going to drill into everything here. This is provided by Visual Capitalist. People can go check out their website. They put out an interesting series of very visual, informative, investment-related charts. Every day is something new and different. And we just picked this one out because it's all about the predictions for 2022. And the first thing I'll say about most of these predictions is that most of them are wrong. Not these ones, but general predictions generally tend to be wrong. But we're going to use some of them anyhow. And Kevin, I'm going to ask you about a couple of these predictions. So one of them in here, top left almost, big tech gets even bigger. It's a bit of an OGIG theme. OGIG has had a bit of a pullback, serious pullback up until the last couple of days, up a lot today. But what are your views on what's going on with big tech? And what do you have to say about the categories of big tech? You know, the old companies, IBM, people don't talk about anymore, but now it's called established companies like the Microsofts, et cetera, that just bought Activision versus the newer tech stocks, tech giants. So first thing, big tech, is it going to keep getting bigger? And which categories of big tech are going to keep getting bigger?
Well, obviously, if you're going to be a tech investor, you have to get used to volatility. We're talking about OGIG, that is internet giants. And I always remind people of the use case study that's so, I think, important to look back at history to see what the future brings. I remember people used to tell me, how can you possibly own Amazon? It corrects 30 to 50% every 12 months. And that's true. It did for almost 17 years. But the underlying growth, the top line growth and the strength of the balance sheet were consistent quarter after quarter. And now look where you are today. So if you're going to own tech names, particularly in light of what's occurring globally after the pandemic, or at the end of the pandemic, I hope here, is that consumer preferences have changed, and giant companies that are growing at 20, 30, 40% a year on an annualized basis are extremely volatile in share price. But the overall trend is up and to the right. And so I have a 20% holding in OGIG, even though it's corrected. I don't try and time the market. I just look at two things. I really look at balance sheet strength, very important. Obviously Amazon had a huge balance sheet, ever growing. And secondly, growth quarter after quarter. And then I kind of disregard or hold my nose at stock price any day, because I know in the long term, I'll enjoy the returns that growth provides you. And so I think tech does get bigger. I think there's nothing that's changed in the underlying trend. People are fretting about PE compression right now because of the threat of Feds raising rates, and that's true. But in the end, growth always matters more than anything else. If you have growth and you have a strong balance sheet, your stock is eventually going up. And that's the premise by which to have and maintain tech in a portfolio.
You mentioned Amazon. If you look at a 15-year chart, you'll see so many times when it pulled back significantly, but obviously it's become the multi-trillion-dollar stock that people think they must own. So top right, there's a topic here, ransomware, and cybersecurity stocks come to mind. And of course, OGIG has quite a hefty component. In fact, the largest allocation within OGIG is the whole business-to-business cloud, which includes cyber security stocks. What do you think about ransomware? What do you think the outlook or the trend is going to be there?
I think it stays intact. I'll note that in recent times it's been reported, and I believe it, that the Russian attack on the Ukraine has already started. They have been using cyber attacks to take down utilities and everything else inside Ukraine, or get ready to take it down when they attack. That's the new nature of war, and I think it takes place all over the world. And as a result, I think the companies that can provide security against that kind of thing are going to maintain their value and continue to grow.
And that's a nice piece of the OGIG portfolio. In fact, positive revenue revisions. So revenue growth, strong revisions, also positive there. I'll talk about that in some of the later slides. Bottom right corner here, geopolitics. We got Russia, we got China, we got midterm elections not coming up yet, but soon. What are your thoughts on each of those three major geopolitical, let's call it, influencers in the world?
I would look at China with a far more weighting than Russia. The truth about Russia is that it's not that big an economy. It's completely dominated by the price of oil. If he does attack, I think we'll have some volatility in the market, but this is just a personal opinion. It's not really going to matter that much, and I don't mean that it's a horrible thing for a country's sovereignty to be lost, but the economic sanctions that NATO will apply and the US will apply to Russia will make that a very miserable place to live. So his victory will be short-lived. And I believe that's going to happen. But unfortunately, the market is not going to correct that much because it's a really small economy. It's one sector. It's the 12th largest in the world. I hate to say this, but it's a nothing burger. China, that's a different story. That is going to be very important to see how policy plays out for the rest of the Biden mandate. The good news there is that China is not as threatening right now in terms of sovereign invasions that Russia is. But on the other hand, politically in the U.S., Biden has been neutered now, and the rest of his mandate after the midterms will be gridlock, which for markets actually is very good. There'll be no Build Back Better. There'll be no extreme policy to the left. He'll play out the rest of his presidency in total Washington gridlock, which I really think is what the country needs now. After printing $3 trillion and seeing inflation at 7%, less government is going to be better. And I think for all of us in equities, it should be a good gliding path of hopefully 8 to 9% for the rest of per year in the Biden mandate.
So I can see you vote for gridlock. Hey, so back to Russia for a second. One of the countermeasures is, and just imagine this impact on Russia, if they get shut out of the US dollar transfers and their companies are unable to actually use US dollars, could have a crippling impact on their economy. So that's one of the strategies that's been floated around. When it comes to China, GDP growth slowing, real estate development slowing, the Evergrande situation everybody's read about for weeks here. What do you really think is going to happen with China's growth rate over the next 1, 2, 3 years?
It'll still be faster than that of Western nations and grow faster. The consumer growth there, this is an emerging economy that within probably 15 to 20 years will be larger than that of the U.S. And so while we can discuss policy and the nature of how that country's run, which is different than a democracy, to have no exposure to it is a mistake. And I maintain my positions in China. I note that Charlie Munger recently became a huge shareholder of Alibaba, and a lot of people, question the morality of doing that. He's just being pragmatic as an investor. You need global diversification in a portfolio, and I own Alibaba too. I don't like the way the Chinese run their country in terms of their people, but that has nothing to do with the investment premise of what's going to occur over the next 5, 10 years. I think it's going to continue to beat North American growth. And you just have to realize that not everybody lives in a democracy.